This is London with Bitcoin Spike and VIP Trader. And now we are into the mix, and what's been hot, you know this, as we work into the New York Open. Congrats on everyone trading Bitcoin. It has been a nice ride to the upside. We're going to go through the details, of course, on Bitcoin, our targets to the upside on some basic patterns that are in play. Looking at the Open in terms of the market, New York, we're just slightly down on NVDA and Tesla. We'll still be looking at the levels of volatility as we've had some nice moves to the downside recently by both Tesla and NVIDIA. Look at the New York Open. Just remind yourselves of one thing. This is not intended for live trading. Okay, it's not intended for live trading. We're 8 to 10 seconds behind, so you'd be way behind the 8 ball in terms of that. Let's go through the technicals on the specifics for NVIDIA and Tesla. Let's incorporate as we look at the market now. Guys, Open, as we look at the price action, Tesla down 0.87%. Let's look at the levels that are getting hit immediately. In terms of the move to the downside, green buy line on the 5-minute on Tesla trying to engage. Looking at the specifics, that is a particular kernel calculative level on that specific Tesla Open. We would want to, I'd say, really look at the, guys, look at the 15-minute, particularly, and whether or not the lower band is going to act as a resistance or support. Would be long over, short under that specific lower band line. Try and identify these as quickly as possible. That's the key level in play. Looking at the 4-hourly, we are pushing down and actually working as a level of support to contrast that specific 15-minute, the specific lower band here. So you are wedged between bulls on support of the lower band and bears along a level of resistance. Taking a look at the Open, Tesla down 1.5%. So a nice dig below with a little bit of expected volatility that just has not quit since Elon decided to let everyone know that they dug their own grave with the Cybertruck. I don't know, guys. I don't know anyone who was really expecting that. As you look at your participation in the market, I want to encourage you to never be overexposed at any higher price as you learn to interact very quickly with the technicals that would be required. Let's take a look at NVIDIA. Where did NVIDIA hit into? NVIDIA had a nice, looks like a nice pick up here on the 5-minute. Let's go to the hourly and take a look at NVIDIA as things kind of settle forward. And we're going to take a look, of course, guys, at Bitcoin. Bitcoin has been so hot. We have our levels laid out and it looks like the entirety of the market has dropped a bit with Bitcoin, including that up front and center. So in terms of, let's say, NVIDIA, let's take a look at the particularly hourly. On the hourly on NVIDIA, you're just seeing the reinforcement of our capital control line on that bearish indication here was the level of engagement on the Open. So in terms of bulls trying to push up and over on NVIDIA, you're looking at a nice level here in terms of a 0.4, a nice move, 0.4, 0.5%. Nothing too drastic though on NVIDIA. That will be the level to beat the specific capital control line on the hourly, without a doubt. And putting things into a frame of reference, we're getting back to this level of support which was engaged precedingly. So looking at that level, it is an area of interest to say the least. Seems like we've been overrun a little bit in the entirety of the market except for Bitcoin, without a doubt. Don't want to lose track of Tesla. We have two options with Tesla. We said the other day it could get bad or it could get a whole lot worse, right? That was pretty much what we said the day where we just continued, bears continued to move to the downside. So it's like it could get ugly or it could get really, really, really a lot uglier. And that's essentially what it did in terms of the bullish. Just not a lot of buying pressure. If we were to look at Tesla and real pickups, let's look at it. Where are we at now? Tesla down 2%. Again, the levels that are going to be engaging for bulls, I just tell you, the big ticket item here is after the breach of any upward sloping channel like this on the weekly. Typically, it's actually on the monthly. You'll see it on the weekly as well. But as you look at this for the Tesla chart, typically you just don't want to be involved anywhere past the breach of this long. You need to be very cautious when they talk about catching the falling knife, etc. What typically are we looking at? Any upward sloping channel as such, and it doesn't have to be a bear flag. We don't have a huge solid move for a flagpole into this, but I just reiterate frequently that any specific breakdown of a channel line formation is just a really precarious area to enter long, right? So to reinforce that is critical. Let's also take a look at that momentum on the weekly. Let's take a look on Tesla, the momentum now on the daily. Taking a look at this specific level in terms of preceding level of resistance, certainly did on the daily engage quite well with this bounce. It was great. We were hoping for some good news with Cybertruck, etc., but it just looks like the production isn't coming in, so we'll pay attention to it. In terms of the breakdown, this is an important level. As we were to look at the breakdown in this cut loose here, this is just going to be something that's going to attract, with some catches here and there, but continue to attract bears on the side of engaging to target levels. So as we were to look at the specific target levels below, guys, looking at the topping formation, the descending triangle, I put the descending triangle in case we wanted to catch at this level and bulls did want to show up at that level, but we do have that topping formation with the double top here. And so that 23.6 is going to be about that 192.60. That's going to be a reinforceable target in terms of the bears. Not to say we cannot pick up before, but as we look at that channel formation, just generally not wanting to be a part of, you guys have heard me say that 100 at least times, if not 1,000, but looking at the channel formation, when we break this, we just don't want to hammer in and charge in necessarily, okay? So that's just going to be something that's going to continue to repeat itself to you until it really becomes a note in the book, guys, of what your tactics are, without a doubt. So Tesla, let's take a look at NVIDIA. Kind of another bad open unless you're guys just completely short on Tesla. Elon certainly didn't give us much in the way of anything positive to guys, to much at all. It's almost like he was a little depressed. I'm not sure how that all came across, or why, or guys, what all went on, but it was just a little bit odd. A little bit seems like it was a destructuring in terms of the comments, destructuring any kind of positive guidance. Maybe, I doubt he had any shorts ready, but someone must have. It's very interesting, guys, overall, as you look at it. Looking at we do have some drivers in terms of, you guys pay attention to some earnings this week as we look at the overall market. This would be Bitcoin, as we're looking right now at a potential hit back down into the hourly 20 moving average, okay? Potentially down into that hourly 20 moving average with some area pickups up and above. We had dialed in quite well last night. We had dialed in quite well last night to a lot of different levels, particularly the 4 hourly was a critical over and under. If we were to look at an over and under the specific capital control line, I have a trend identification system on right now, just so that you know, something that we are looking at developing and bringing to the forefront. But it's going to keep you oriented positively with the trend, which is good. It can help you stay in a trade without a doubt, big time. If you look at the 4 hourly, for instance, since that capital line turned blue, we know that we turned blue in this area in terms of going bullish on Bitcoin with a max of 16% in about 9 days. Was it 7 to 9 days, 8 days, something like that? So nice trajectory to the upside. We'll go through a few of the patterns that are in play. Looking at your momentum, we have shifted to the downside on momentum on the lower time frames, even some of those mid time frames. We want to look at why don't we pay attention very quickly to, let's go to Bitcoin and go to the 4 hourly and take a look at the momentum as that capital control line is being tested again. Let's take a look at the momentum and see what's been happening with that momentum. Now, if you just played by the momentum alone, you got surprised here. The 20 moving average, surprisingly, let's say this, surprisingly didn't play right on that 20 moving average in terms of the entry. We had some other levels that were playing, but normally we see a nice confirmation hit back at that 20 real close. If we were to look at that, let's just assess such in terms of that point, about that $88 difference, $75, $85 in terms of that difference. But looking at the momentum on Bitcoin, bam, you'll see this surprise move, bam, to the upside. What reinforced, we can say, that 20 moving average level, that threshold. We had some additional levels in play on the micro and some additional patterns, of course, to look at. So what we are assessing now is the validity of the drop-off in the momentum. That's going to be the assessment. How much of a surprise did it provide in this level? What we will note is that while the capital control line was bearish, this red line here, calculative, RSI, stochastic, and MACD, what do we have? Well, we had a direct line hit, bam, for a short. That was a nice move. What did we have down here on the 4 hourly? On that capital control line, bam, direct hit, nice move. right? So when we see a little bit of give and take, we actually see a bit more conformance with that capital control line, our capital control line, than we do on that 20 moving average. These can be, guys, on Bitcoin can be a bit tricky with pricing, though we typically see a lot of technical conformance and a lot of volatility, which is why we focus on it. In terms of the move to the upside, I really expressed the following to you 4 days ago. It was over the 200 weekly moving average. What were we? Over the 200 weekly moving average, we were going to be bullish, long. Encourage you to take a flash position if you wanted to take some profits at any sooner point, and then to have a carry position. You guys can see why would you want to have a carry position. It's 10% right now to the upside. The dynamics in play. Let's check in with Tesla. What do we have with Tesla? Really pouring down through 6 hourly. Can we get a little bit lower on the daily would be nice, really. Honestly, as I look at where we're at on the daily would be nice. Looks like that hourly is trying to pick up at that specific lower band. That's going to be the level to test as we look at that lower standard deviation band on the hourly. That's the level, the over under that's going to trade right now on Tesla. A lot of downside participation in the market. We have any upside targets? Dangerous to say that. Clearly, upside targets are just being ignored. As I guess we've got some real institutional liquidation potential in terms of Tesla, as we were to look at Tesla and just to understand that there was a shock really through the phone as Elon picked it up. And you'll notice the earnings in and of themselves didn't really affect Tesla, did not affect Tesla. It was really Elon just getting after it, and he may be a source of volatility, which we will be happy to accommodate. We'll be happy to thumbs up. We'll take it. Appreciate that, Elon. Looking at the level that's about engaging now with a descending level of resistance, near flat bottom support. If you wanted to draw this up in terms of a potential downside target for Tesla, if you're enjoying the volatility, fantastic. Some of you I know right now I cannot rip away from Bitcoin. I just know I can't. So that's the reason that we're trading Bitcoin. I'll tell you that you did have an engagement here if you wanted it at the specific lower, specific standard deviation. If you wanted it, right, you choose your trades. That's it. We are behind 8 to 10 to 12 to 15, who knows how many seconds on YouTube. So to the extent that you want to trade live, guys, that's just not it's not something that I would ever recommend anyone do. And I've never heard anyone really say it's because you're 8 to 10 to 12 seconds behind. You're going to get creamed if you're following a live trader, quote unquote live. You've got a buffer there that's really going to just wipe you out. So looking at the specific levels, Tesla, just you guys, what are we going to do with Elon? I don't know. He's firing bullets at the truck. We don't get points for that. You guys saw the bulletproof nature of the Cybertruck. Everyone wants one now, right? It's just cool stuff. Kind of like just a cool toy we have to admit to have. So looking at the level, this is going to be your level of engagement. We have the fire sale level below on the hourly. Enjoy Tesla, enjoy the volatility. Looking at the downside in terms of 3.38%. When are the bulls going to get involved in the specific pickup routine here? Why don't we do the following? Let's look at, just so that we have this as a matter of fact for levels of engagement. Let's look at right now being at the golden pocket. Now that is a significant level. We will go ahead and confirm that's a significant level. The fact that we're at that specific golden pocket on the interim, all right, on the interim range, it's a significant level, right? Do we have a lower construct in terms of an additional framework to the downside that we can assess for purposes of confluence? You got it. On the entirety of the range, were we to go to this threshold low at just sub 110, right, on Tesla, and we were to look for confluence here, we're at the 50% on that, on the entirety of the range, and then on that temporal range, we are essentially looking at that golden pocket. So we have some multi-tiered angles to look at, or not angles, but multi-tiered levels to look at of engagement. That's 76 and the golden pocket as we were to address the issue, which is always present, as to whether or not the entirety of the range, okay, is going to be the defining, essentially the defining technical instrument which needs to be applied, or tactic that needs to be applied, or whether it will be this kind of this internal range here. So looking at that macro range here, identified from this low to this high. These are your discount levels, right? Based on the low to the high. Then we have the specific internal range function. If we were to look at that intermediary range with this low to this specific high, is there a right answer? What I will normally start doing, just so that you know, is I will start to literally measure, and you're going to get a different percentage than you'll be shown on your Fibonacci's. You'll be given a different percentage. Okay, if you look at your actual measurement of price to the downside, remember your Fibonacci's are based upon the move from the low to the high. Your Fibonacci's are that percentage give back based upon this move. So in terms of the range definition, the percentages are essentially they are expressed, or exactly they are expressed as a percentage give back. Okay, as a percentage give back that we would like to see, guys, that we would like to see and assess on the interval, let's say this intermediary, and both that macro level as well. And that just means once we've gone to the upside, the entirety of the range, that 100% completion is going to be a 100% move back to the downside, an 86% move back to the downside based from the low to the high. From the low to the high, looking at that golden pocket feature, okay, that golden pocket feature, if we were to look at that 65% based upon the entirety of the range. Now, does that mean from the high to the low? Pay attention. Does that mean from the high to the low that we're looking at a 65% discount? No, guys. You're actually at a 40% discount based upon price alone, not including, the Fibonacci's are going to include the low to the high. So within that range dynamic, we're looking at a 65% discount being the golden pocket, just looking at the calculatives expressed in this range, okay? As you were to look at, however, and I think highly relevant, and I want to bring your attention to this, as we look at the 50% engagement from the low to the high on Tesla. This is you can look at the 4-hourly, 6-hourly, 8-hourly, daily. The essential componentry here in play, what I want to assess is the percentage of discount currently from the high to this low. And I'm talking about the real discount, the real actual computed discount from the price certain high of near $300, just under $300. As we look at this discount, and this is highly relevant, looking at this, we're at 32.59% in terms of the discount achieved. Why is that important for me? Because I will tell you, institutional investors may be interested long-term in Tesla, and regardless of the price, or particularly as it is moving up, may say, and do say, you can check this. You check this with your local mutual fund dealer, guys. Check it with your local mutual fund manager, and let me know if this copies or checks out. Okay, but looking at the opportunity to place orders at a discount, well, that's almost a 1/3 discount. Just on price, saying, well, the price is $300. We're going to want it says mutual fund manager X, Y, or Z, or institutional buyer X, Y, or Z. We want a 1/3 discount. What else are they going to say? Well, they're going to say we want a 1/3 discount. Others are going to say, well, you know what? We're going to take a position at a 50% discount. We believe the volatility is going to be there at some point. Maybe the company will get itself together with Elon. Maybe they're going to make more cyber trucks and surprise everybody. Who knows? Okay. In terms of the specifics here, notice that a 50% drop is an institutionally recognized level of participation. Is it a dip? Yes, but it's an identified 50% versus a 1/3. You're currently at about a 1/3% of a discount from that 300. 50% would land you right at about $145. Say 147 to be exact, $147.83. So the fund manager, say a mutual fund manager, or a guy's a buyer on the institutional side of things, as they were looking for discount value opportunities in the market, they don't want to buy it here. They don't want to buy it here. When these things are setting new records to the upside, they're smart, guys. They're smart. They're going to say, that's fine. We want a discount. We want a discount. This is a 30% discount. Give us a discount. They don't want to buy here. No, they're going to say we want a discount. It's about a 45, 50%. We'll have to look at it on the lines discount. They're just not, guys, there are people whose job, literally, it is solely while something is going up. Or, guys, irrespective, you could also take it to an irrespectively, if we were to look at just the overall, irrespective of trend, continually wanting a discount on what they would deem to be on their buy list, right? However, they may choose to designate as such. Do you understand the notion in play that currently we're at an important level? Okay, institutionally speaking, okay, we're at a 1/3 discount. Okay, I would be interested to see levels of engagement, as would many, at a 50% discount. Okay, so a 50% discount, and understand those are institutional discount rates. You know, Mr. or Miss buyer in the market saying, okay, that's fine. Our institution is going to acquire at a 50% discount from its current price at 300. You have targets to the upside, fantastic. We're gonna have cash scheduled in at a 1/3 discount on Tesla. We're gonna have cash scheduled in. Someone may say, in depending upon this, guys, and how quickly they move their product, meaning what they hold, it could also be, well, we place institutional orders at 5 to 10% of a discount. We always want a discount. So we'll say, we'll say that person holding that title is essentially they're always looking for a discount. There is no function in their office to buy high at all, or in their specific role, there is no function which includes the ability or the willingness, or guys, probably both, but to buy high at all. So when you get a discount into a specific institutionally recognized, you'll just say institutionally recognized is going to be a nice round number. It's going to be a 5%, a 10%, a 25%. Okay, it's going to be a third, guys, it typically be a 1/3, it's going to be 50, 75. Okay, but if you're looking at this, and look at the number of tech stocks that went down 50 or 75%. Okay, when you're looking at market retracements, these become interesting to find the buyers with the authority to buy at the 5 or 10% discounts versus the buyers who have the authority and who are placing in cash at the heavier, lower levels, such as the 1/3, which is currently engaging, or that 50%. It turns into that profit equation, doesn't it? That we deal with all the time. As you look at it, it's like, okay, so these companies, they have money at 5% off, 10% off. You guys got it. They have money at 5% off and 10% off. They have money. You got it right. At the 25 and the 30% off. You got it. Okay. And they've got money at the 50% off. So when you look at it, it is that equation. It is that equation that we're often talking of. It's like not a question of if you can make money, it's a question of how much. And when they get a little too anxious or they violate their equations that are in play in terms of those acquisitions, the guy who with the 5 to 10% discount levels, or if it's a single chair that he's in role he's fulfilling from, and it's his point, his purpose to designate between let's say the cash allocation acquisition funding that goes towards a 5 to 10% drop, okay, in terms of the allocation of that buyer's how he's to fill his book and what levels of authority he's going to place capital in at the 5 and 10% discount levels. You can understand he could become upside down very quickly if he's not appropriately structuring in the cash at the lower levels. So thus the same equation that you're dealing with as you look at the capital equation. Well, I want to put more money in at a higher level. It's industry-wide, guys. That equation that you're looking at consistently to engage as you look at, okay, great. Just understand that it's the same equation that is rampant in the industry, and it can cause fallout at the higher levels, okay, institutionally, and it can cause certainly fallout in the lower levels as you look at your own participation in the market. Always with the ability to operate lower, and the way that I put it, and you guys know this, just don't get hurt. Right, if you're going to take a position up top, specifically along a level of support, which is differentiated, we're on the 6 hourly, a little bit of an odd time frame. Just don't pay attention to that. We can go to the 4 hourly, no problem. Looking at the framework here, it's just don't get hurt. Right, do not get hurt in this level. Just at the bottom line, because it can sting you, it can hurt, and it can sting anybody. Is the point. So, and just understand that 5 and that 10% is there in the market, institutionally speaking, as a respected, well-respected institutional level of discount, 15%, okay? And that may be on something that's hot, that's going up, that they believe has long-term value, that their analysts have looked at and said, okay, great, we're in buy mode. Okay? And understand too, where is their buy mode? It's at a discount. It is at a discount, always. So if you find yourself in the market buying high, these guys aren't buying breakouts. They're just not. As you look at institutional levels of consideration, they're just not buying breakouts, right? Now let's look at that hourly. We did, in fact, pick up on that specific fire sale line pushing below such. Let's just take a look at the move thus far. Now, that's a 1.48% move from the specific fire sale line. That's a bit of a dig this morning, isn't it? Now, that's a situation, a tough open. I would say just a tough open for Tesla. That's not necessarily my style, as we would look in some hot volatility with some quick moves. So Tesla really pushing into, and as we would say, she wants your time. This morning, Tesla wants your time. I would call that at like 25 minutes into the session. Okay, that's a nice trade. That's a nice trade. It did give us the opportunity to talk about some of the features that are in play, as well as the dynamics between the, let's just say, an intermediary range from the low to the high in terms of those specific Fibonacci's. Confluence or possible overlap as we look at the golden pocket on the intermediary, the low to the high of that intermediary, the shorter, essentially that shorter time frame based, shorter interval low to high here has its own Fibonacci's within the, and guys, you know, you're going to find within all these levels, you're going to say, well, there are too many levels to hit. Well, you could also just look at your fire and ice. Are they Fibonacci? No. Will you find overlap with them? Yes. Your fire and ice are essentially geared towards calculated levels of support and resistance, dynamically kernel calculatives, dynamic kernel calculatives. So as you were going to look at that, when you say, well, that just didn't even hold, it's not even holding, it's a level of support that's not holding. Okay, so as you look at, well, every level of support or every line in fire and ice should hold, you need to understand that actually, looking at that daily, you see a nice level of resistance engage at that specific lower band. That's a nice hit, by the way. That's a nice trade. So as you would look at your fire and ice, just pay attention to the fact that you're expecting every level or line to hold on fire and ice is going to be the equivalent of you saying, well, every trend line has to hold. And that's just not, reality. As you look at that, that's going to be really a far-fetched argument to try and make. Guys, as you trade, you know better than that. So bring the same concept into your fire and ice as you look at and some we could say some great volatility as we were to look at the open for Tesla. It's just to the downside. If we're screaming to the upside, everyone would be more comfortable. I just tell you, you know that thing going down and picking up below. I bring up the specific institutional framework this morning, not to overtalk the industry whatsoever, but to let you know what big money and big guys are doing. They're not going to buy it up here. They're not going to buy it up here. They're not going to buy it here or here. They are not going to buy it here. They're not going to buy it here. They are not going to buy it here. I'm telling you guys, they're not going to buy it here. They're not going to, at any pivot that you see, there is not a button that's going to work on their keyboard and allow them to keep their job if a buyer, okay, who literally has the job of buying at a discount is going to buy high. It's not going to happen. So when you look at your participation in the market, you are probably more comfortable with something that's going up, okay? They're going to be only comfortable to the extent that it's going to provide them with a future discount. And it turns into the profit equation. Yes, it turns into a time formula as well, doesn't it? Because we have to go up, then we have to come back down. You know, that takes time to then go back up and then come back down. It takes time to go up and come back down, to go up and come back down, to go up and come back down. But institutional buyers, they know, and this could hurt institutional buyers, right? It could hurt institutional buyers, right? So as you look at those discount levels, just always think of who you're participating with in the market. Are you more comfortable picking up with bigger, smarter money? I'm going to argue if you can, guys, if you can frame your participation in the market around some smarter money, okay, rather than what's the next big move, what's the next, guys, the hype train, etc. Just know that there are some guys in charge of making sure that companies stay open, investment houses stay open, and generate huge profits. And their job is to buy at a discount. When you trade, okay, when you trade, you notice that you do better when you enter longs lower. Fact, you got it. Now, not everyone trades that way, but you'll notice when you place your orders lower. Here's Bitcoin in the 4-hourly. Yes, what happens when you place your longs lower? They get picked up. It takes more time. Of course, it's just a great idea just to chase up and out and everything else. We're going to have breakout after breakout after, guys. Come on. If you look at something that's performing, even performing well, you may get to the point, well, okay, half the breakouts are trading well. Hey, 2/3 of the breakout trades are working. Like, man, we had a day, it was 100% of the breakout trades were trading to the upside. Wow, that must have been a day. That must have been really, really nice, huh? Or we had 3 or 4 days, everything was breaking out to the upside. Every breakout trade held. Ah, wow, okay. Now what you're gonna say is, guys, you know, within the breakout trading, right? You guys, you know this, within the breakout trading, you're going to still have traders that are focused enough on a breakout to what? To enter below. You got it right. In terms of, there's a cap line function. I see that just winding itself up. On a breakout trade to what? Enter below. You got it. On a breakout trade to what? Consistently, right? We're geared to want to be a part of it, not want to miss any move to the upside, right? But you're just going to notice that you do better typically. Now, there are a few runaway, high-speed bullet train moves in the market you got to be prepared for. We know that. And we are. We catch the spike. Guys, it's Bitcoin spike. You know that. So we got that name. We came by that name honestly. Looking at the lower level function here, all this came from a small little climb up from what? You guys got it, the 4-hourly capital control line. And you could also say, well, we also just parked the specific price action up and over the 20 moving average on the 4-hourly. And all this has come from that. All this has literally come from on the 4-hourly, a dominant time frame, well-respected time frame. All of this on Bitcoin, as we look at this, and it's notable, it's noteworthy, came from a small move up and over the 20 moving average. The whole thing could be dialed into that, or a particular lower level pickup. Your cap line had you lower, okay, than that 20 moving average. But man, the same tactic that we talk about every day, just over bullish, long, under 20 moving average bearish. Do you mean to tell me that we've gone like 15% in the last week, and the one thing we haven't done is cross back below and hold a candle under the 20 moving average on the 4-hourly? Okay, so we don't need to sign up for complication lessons, do we? This is London with Bitcoin Spike and VIP Trader. Nice to see you this morning. Let me see what we got going on in the back. And nice to see everyone here. Just talking about the details for Tesla. Just a slow move. If Tesla slows down like that, she may be off the grid for a while. Let those institutional buyers hammer around and stammer around with Tesla. If she wants to play like that, guys, we like the volatility. It allows us to address some key concerns as we look at the market overall. Let me say good morning to Venus. Venus, good morning. How are you? Boom. Nice to see you this morning in the chat. Just turn that on. So yeah, you mean to tell me that all of this, the entirety of the move, the most rambunctious move, I promise, this is the most rambunctious move in the market for Bitcoin this year. Why? Because everything else is tanking. All of the other key assets are tanking, right? Tesla, NVDA, it is. So maybe, I'm not sure, Meta and Microsoft, I think I saw something in terms of earnings reports this week. Yeah, okay, maybe there'll be some saving grace to keep the NASDAQ in a semi-bullish constructed position, but this is the most rambunctious move because Bitcoin's off in sailing and focus. 20 moving average, up and over. Did you ever have a target to the downside? No. Do you have a target to the downside based on the 4-hourly right now? No. You just don't, right? You do not. So it's been, as we look at this, since the crossover on the 20, and again, the cap line made you more money. Fortunately, nice. in terms of that entry. We want that trend confirmation in terms of that, and we'll be continuing to test that. We're looking at 15% in a week. It's just it got to be a beautiful move, didn't it? So bravo, beautifully well done. As we look at the dynamics in play, that is the key reinforcement, and it's not just the reinforcement that we would look at now. It's the guideposts we're going to use for this journey in terms of where Bitcoin's going. The 4 hourly has just been solid, guys. It's a solid mover and signal generative as we look at it. Let's take a look at that hourly. How's the hourly doing on Tesla? Just to take a look in terms of the reinforcement. Now, let's just say if you had gotten in and put an order in at that specific fire sale line, it's nice to see us a 2% move. Slow, 2% in 35 minutes? Slow, right? We are seeing a pickup though, and we're going to note that. Do we have an upside target? We have an upside target, without a doubt. We do have an upside target, guys. Any preceding flat bottom support, we're going to mark it as an upside target, bottom line. But I do like to say, okay, if you have an upside target, what do you need? You need a pattern to get you to your target. We don't mind a V shape. Really, and I just tell you, we would love to have a single wick down, boom, boom. The higher the level of velocity, the higher the level of volatility, the more comfortable that we personally are. Not everyone's built like that, okay? We have to wait 20 minutes, 30 minutes for a move on Tesla on the open. It's not what we're in this business for. You guys know that, but it's nice as we talk about institutional frameworks, discount levels, and review this stream in terms of the beginning, the framework from the low to the high of the entirety of this range as measured, what the Fibonacci's are telling you, the intermediary range from this low to the high. What are these Fibonacci's here instead telling you? Where, if we're hitting into that golden pocket right now, that 61.8 to the 65th, call it 205, the ballpark, as you're looking at confluence, as you're looking at overlay, and as you're considering, always considering, please pay attention on Bitcoin as well. Great opportunity to look at Tesla and say, hey, what can we bring into the foray for Bitcoin? In terms of the specifics here, okay, we were at about that 1/3 of a discount level. Boom. Institutional. Heads up. It's on the map. It's on the map, guys. You talk to a hedge fund or a mutual fund guru, tycoon. Talk to any one of them. Maybe particularly even the people who work for said individual, and ask them, are you interested in like flat percentage discounts? I mean, you would just say you want, based upon preceding price high, you would want just like a 25% discount or a 1/3% discount. Is that true? Ask them. You guys ask them. I won't say ask the brokers that you deal with, because it would be great if you could get a solid answer from a quote unquote financial advisor. Okay, if you can. The ones that I've met recently are selling shoes on the side and weird things like that, and fashion design shoes. I don't know what's going on with the financial advisement industry. Honestly, I've met some cats that I'm just, honestly, I'm just like, what is going on here? You're a financial advisor and you're selling shoes on eBay on the side. Wow, all right, hey, okay, let's sit down and plan out our next trade. There's no possibility of that happening, guys. So in terms of that. And it is what it is, but ask if you have some high-level professionals that you know, and we know some, with Morgan Stanley, JP Morgan, BlackRock, etc. Run this by them in terms of the percentage discount, right? The percentage discount that you're looking at overall, aside from the particular Fibonacci's in play. Alrighty, we got it? We got it. Good talk this morning. That's a good talk to have. 15-minute looks like could be incoming with that specific cap line feature. Let's look at how well we've recovered. Not much, guys. What's rocking and rolling a little bit? Let's take a look at NVIDIA just for the purpose of taking a look at NVIDIA. Nicely done in terms of that hit into the hourly, that lower band, and you're coming up nearly in contact with that specific 20 moving average to the upside. Nicely done. Now, this was a much cleaner feature that we can look at, right? This was a much cleaner feature that we can look at NVIDIA. Not quite as much pressure on it right now. Let me schedule into this as best I can. Hope you're all doing well. Hope you all had a great weekend. That's the bottom line. Are you ready for a good week? Not trying to hype it, just trying to tell it like it is. We gotta show up the right way. This is our market. This is our market. What are we doing with it? We're doing what we choose to do with it. In that regard, it is our market to work, right? To enjoy. See the specific preceding level of support reinforced here. Bam. That's the appropriate demarcation on that 5 minute. Let's go to the specific. Let's go into that hourly so that you can see preceding level of support engaged. Again, what is it? Lateral. We look at these all the time. Nice lateral level of engagement. Nearly perfect. We agree. Orders were waiting. Mark your lateral levels of engagement. This is a beautiful move, guys. In one day, you're looking at a move of, look at this, nice drop to lateral engagement at about a 2.5% move. That's a nice move. Between that and Tesla, we'll take the volatility. We agree. We're about 40 minutes into the open in New York. We'll take the volatility. We agree. Yeah, NVIDIA showing up the right way. Now, in terms of where were we at on this specific time frame, I believe I can schedule in. Let's take a look at the dynamic that we had to be a little careful of, the specific descending triangulation, right? As we were to look at the preceding level of engagement, support flip to resistance, bam, shorts engaged. They had to be careful of that lateral pickup to the left. We agree. So when you're looking at a lateral pickup, it can be, and was here, that hurdle for the bears to complete this specific pattern to the downside. Identify your targets, identify your hurdles. You got it right. Nicely done. We do see, you get to the point, and I'll just tell you, you get pushed around long enough on a bearish, guys, on something where you've got a market maker otherwise that's literally just going to be hammering into some volatility patterns to the downside, And you stop looking at these for movements to the upside. In terms of the volatility expression, I will re-encourage you continually to look for volatility expressions and look at the maximized level of value consideration along that level of support. You got it right. This is London with Bitcoin Spike and VIP Trader, going to head in and go hit some iron. So I am good to go later on in the day. If I don't go hit the iron early, just to let you know, my energy just falls off. So I cannot make it through the close and through this afternoon in terms of technicals for you guys, because I'm up at like 3 a.m. doing market prep, etc., working with some of our dev group overseas. And I'll just tell you, I'm going to go hit the gym now. We're going to hit and power into that. I will have my charts on me. In terms of VIP, good morning. Pleasure to see you. And we will hit this week like we mean it. Note the Fibonacci discussion, the institutional discussion. Note, not financial advice. Former hedge fund owner, private non-SEC, not financial advice. You guys know that. This is London with Bitcoin Spike and VIP Trader. Way to trade Bitcoin. What are we over that 200 weekly? What are we, guys? We are long. What should we have? We should have a flash trade. And what else should we have? We should have a carry trade. Boom. What are we? On the 20 moving average on the 4 hourly. Well, we're long. That's right. We're long over. True? That's right. We're what? We're short under. And what should you have? Well, you should probably have a flash trade and a carry trade, right? A flash trade for a small move and a carry trade. Boom. You got it. Same to the downside. Let's rock and roll it. Let's keep on par, on target with this 20 moving average. Way to trade, guys. This is London with Bitcoin Spike and VIP Trader.